Can you hear me now?
Yeah,
Hello?
give me just a second. Is this Cameron?
Yeah, can you hear me?
We can hear you, Cameron. You're good to go.
Well, I'm very sorry that we had some issues with that. My name's Cameron. Alan, I'm glad you're here. And is this audio going to work for everybody here? I hope so. Well, let's move ahead here. We got. Hey, I want to thank you, Chuck, for inviting us on today. This is always a great forum, and you guys do a fantastic job of really highlighting a lot of great software out here. And, I know for everybody joining us, it's been a long day. Thanks for sticking around. You've seen some great presenters, and we really hope that this is just the icing on the cake for you. We're Dimension Traders. I'm Cameron Yost. I'm your host, and our moderator is going to be Professor Allen. And over the next 30 minutes, he's going to show you how you can enter trades with absolutely complete confidence. Yeah, I'll quiet down a little bit. I won't scream. Maybe that'll help. I tend to talk loudly. So, entering trades with no uncertainty, and he's going to show you how to do that in just a second. When he finishes up, I'm going to get back on here, and I'm going to show you how you can claim a free guest pass into our daily training room. Now, Professor Allen has been with us over 15 years, and as you can see, he teaches indicators, and he's just very good at what he does here. So let's move on ahead. And I don't think I need to go through this. You've seen that all trading does involve risk. We trade futures, and you've read it all before. Take a look there, put yes in the box that you've read this, and make the lawyers happy, and we'll move on from here. All right, I'm going to kick it over to you, Professor, and you just run with it.
All right, give me just a second as I get the projector running here and I figure out what, hopefully we can get this going here. I'll be looking for the image. And of course, I'll wait for that image to catch up. Is that a clear picture there, or is it a little distorted? That's the question I have.
It's not a clear picture, no.
Okay.
There you go.
There we go. There we go. All right. Hello, everyone. My name is Professor Allen, and I'm going to be walking you through how you can blend some proprietary indicators with some common indicators and come up with some pretty good setups to work with. But the real question, I think, from my experience, and just to tell you a little background on myself, I've done a lot of coaching with a lot of traders with software companies, and one of the biggest questions through frustration of many traders is they just want to know when and where to get in the trade. I mean, why does it have to be so difficult? And so this is what I'm going to show you today, is exactly how you can find your entries. Hopefully these charts will move over for me quite simply. If you look at this chart here, right here where you see the arrows pointing down, this is the exact price bar that you would be taking a short on. And then where you see the three up arrows, this is going to be the exact price bar that you'll be looking to go long on. And again, with the other three up arrows, and I believe someone's mic is still on that needs to be muted. With these three up arrows, again, this is another entry long, and this is the exact price bar you'd be going long. Doesn't look like it worked out too well. But then you turn around and you go short here, where the three down arrows on that particular price bar when it closed. And of course, if I move the chart over just a tad, you're also going to take a short right here on this exact price bar. Now, you may be asking, how do I know this? And Cameron, are you still there? I think I can hear you in the background there.
You shouldn't be able to hear me. I've got my mic muted. I don't know if Chuck can do anything.
I can hear you just.
Yeah, I don't know what's up here, Professor. I can't turn it off. I've got it X'd out down here. Let me see.
Well, just turn your volume all the way down. How about that? All right, so there you go. And these are going to be the exact price bars that you're going to be looking to enter into the market on. It'll be right here. Now you say, how do I know that? What determines that? Well, and I'm going to show you that if I can find the right chart here. This is that exact same area with all the prices turned on, with my colored bars turned on. The type of bars that you're seeing here are a proprietary indicator that we developed. We call them ZT bars, and they are a type of hybrid Renko bar. Now, if I show you another chart, this is another part of the market where you'd be going short, or maybe it's this one. Or this one's where you're going short here, you're going short on this price bar here, you're going long on this price bar here, you're going long on this price bar here, and you're going long on this price bar here. And again, that would be determined by these colored price bars. And then in the previous chart, these longs and shorts that you saw in entries were based on getting in the market on these colored price bars. So when you got this first green colored price bar, you would be taking the long. When you got the first red colored price bar, you'll be taking the short. What plots these green and red price bars is what we call our signal alert generator. Our signal alert generator has up to 12 different settings that you can set it at. When a signal alert actually plots on the chart for you folks, let's take a look at the long. This is what the long signal alert is going to look like. And I'll kind of blow this up just so that everybody can get a good view of it. It plots a bunch of text out to the right, and the first part of the text that comes out is what we call the suggested entry price that is going to plot on the chart. Okay? One says they can't see my cursor, so I'm going to try and find out how to use the cursor or how to make the cursor available. For some reason, I'm not able to figure out how to make the cursor available. So we're going to have to just run with this, if you don't mind, unless somebody can tell me how to make the cursor available. Is you can see where it says the first dotted line, 1225. That is the exchange time at which the signal alert plotted on this chart. The market, I believe, in this particular one was the gold market. It says signal alert. It's all in green because it's a long signal alert. And it's giving us the suggested entry price of $16.44. I believe I took this picture this afternoon. The rest of the text that you see above it is what we call our money management system. You can see that this, on the gold market, it went well beyond the suggested entry price. This is 16 ticks away, and it was still going up and continuing going to the upside. This is a money management system that we use that was designed for the E-mini to help assist you in taking profits and in scaling out of your position. This money management system was basically designed for the E-mini futures market. You can adjust it internally when you purchase the software to have it set to whatever targets you want. It does not enter you into the market though, folks. The signal alert generator will just plot on your chart, and when it plots on your chart, it's basically red bars you're going to go short and green bars you're going to go long. When the bars do plot, when the first red bar plots, all of this text will continue to plot until the signal alert generator senses that it's losing momentum in that trade direction, and then it will plot a white price bar, and the signal generator is reset, and it will then start to look for a new signal alert. Now, what makes the signal alert plot on the chart? That's the interesting part of what we're going to look at. What I'm going to show you is a typical chart that we use. This was today. We kind of covered the market up until from 8:30 exchange time to 11 o'clock, and we look to hit targets of one target of around 2 points and the other target of around 4 points. And you can see that we call it the less conservative trader hit his goal with 3.5 points today in 3 trades. And that's basically all we had up until 11 o'clock. The signal alert generator and the indicators that we have here are pretty simple. This top indicator in the top main part of the trading chart that has these 2 yellow bands and this band in the middle, this is a Keltner channel. Now, a Keltner channel is a very common indicator that's provided by most charting services these days. Now, we have different calculations for all 3 of the bands than a typical Keltner channel has, but it works in the exact same fashion. And you're going to find that the Keltner channel can be very useful in your trading, especially in looking for trend continuation or trend changes. Basically, if you get above the middle band, you anticipate more up, and when you get below this middle band, you anticipate more down. You'll also find that the E-mini in particular and some of the other markets tend to channel within the 2 yellow outer bands and bounce off that middle band quite often. The next indicator that we have that we use that we find very, very useful, and I'm going to scroll back the chart here to a nice area to describe it, is called large trigger lines. The large trigger lines are a pair of lines that are cyan blue when they're going up and they're magenta when they're going down. We use these as a direction indicator and a momentum indicator. They are a moving average. They're not a simple moving average. They're a linear regression, and that's as technical as I can get with them for you. But I can tell you how we read them and how we use them. You see, when the trigger lines are cyan blue and going up and they spread wide apart like you see here, and they get good slope and good angle going to the upside, along with the market pulling away from on top of them, we can identify strength and momentum in the overall trend direction going up. And when they turn magenta and turn down, again, if they can get some good slope, some good angle going downside while they're spreading wide apart, along with the market pulling away from below them, we can identify strength and momentum in the overall trend direction going down. So they are a direction indicator and a momentum indicator, and they're very important in your trading to know if you're trading on the correct side of the market. Hopefully that makes sense. Now, this may look like a bunch of indicators, but actually the main part of our trading chart is mainly what you're reading. You see, everything that you see around the main part of our trading chart are all of the indicators that setting number 1 for the signal alert generator is looking at that have to be satisfied before it will plot the signal alert on your chart. So what happens is this trade bias selector would have to be satisfied in what signal alert setting 1 was looking at for it to plot a signal alert. Same with the MACDs here. Same with the Auto CZ, our chop meter, and the Easy Trader. Now, you don't need all of these indicators on your chart because the signal alert is going to plot on the chart, and as we showed, it's also going to give you a suggested entry, a suggested stop, and it's going to plot the money management system. But what we use it for in the room is to help us to anticipate when potentially you're going to get a signal alert so you can be ready to get into the trade. So you know when you should have your hand on the mouse ready to enter the trade, or when you can have it on your coffee cup taking a drink of coffee. But even the trigger lines and the Keltner channel, and I've already told you the Keltner channel is a very common indicator provided by most charting services. Well, so is the trigger lines. You could probably find them somewhere out there on the internet if you were really looking for them. Again, they're just a type of linear regression moving average. But this is the signal alert generator, and it was designed to be a conservative piece of software to tell you exactly what price bar to get in on and exactly when to get out. When you're getting out is basically based on the money management system. The money management system that I was showing you is a starter system for the E-mini. By all means, you would probably adjust it to each individual market. But as you can see, and I'm just going to run you back through what happened today in the first couple hours of the market, we reached our goal with 3.5 points for the less conservative trader in 3 trades. Now, today's a slow week. And then if you move back, we can go back and see more signals. Here's a nice little short. There's a loser to the upside, but let me tell you, that's going against the general trend of the market. Again, your trigger lines are magenta. The market trend is down. Why are you taking a long? You see some nice little shorts here, 2 little shorts here. This one's a little longer short. Another fell to the upside, but again, same reason for the last long. You wouldn't take it. You still have to use some discretion in your trading. You wouldn't take this long signal against the general trend of the market. Again, you get a short. This one didn't work out very well. May have gotten a break even. This was Wednesday's day. We only had 1 trade yesterday between 8:30 and 11. And it was good for 2.75 points. Because by our strategy, this little wick here is pointing where the market retraced. As we were locking in profits, it came back and hit our stop right in here and took us out of our position, even though it continued to go down even further. And that was Wednesday. And then Tuesday, we hit goal with 4.25 points. Kind of get it on the right day here. We had a loser to start out the morning, and then we had a nice 5-point winner to the upside. So this was a beautiful trade to the upside. You can still see we had some other trades pre-market that did pretty good, but we don't mark up anything pre-market. We feel the best time to trade the market is in the first couple of hours of the E-mini, the first couple of hours of the exchange open. Monday's results were pretty good also, even though we only had 2 trades on Monday between 8:30 and 11. We got 2.75 points on the first trade, and we only got 1 point on the second, so we still walked with 3.75 points, and we were all done by 10:30 in the morning, and nothing else plotted till 11. And so those are the results. Now, if we take a look at this is 4 different markets that you're looking at, and this is currently what's going on in those markets because they haven't closed yet. The top chart is the E-mini on the March contract. The top right chart is the euro. We know the euro is really slow at this time. The bottom right corner chart is gold and what the gold is currently in a long, and the bottom left corner is the February contract for the crude. We can just kind of look at what the crude did today. It looks like it had an okay trade right in here, but it looks like a couple of fails right in here, but a nice long here. It's currently in a nice short. This one would have been semi-profitable, but you may have avoided it because the trend was down. A nice short here, an okay short here, a winner to the downside here, probably a loser here and here, but 2 winners to the upside, a winner to the downside, another winner to the downside. Here's a loser to the upside. Here's a nice winner to the upside, another nice winner to the upside. Looks like we get a loser here, a winner to the upside, a somewhat of a small winner to the downside, a loser here, and here probably a break even, a small winner here, a good winner here to the upside, a loser, a winner, that's a loser, but going against the trend. There's a winner, there's a small winner, there's a winner, and that's just all on the crude. I'm not cherry picking the charts, folks. I'm just going back and forth here, starting at the beginning of the market and looking back. And so that is the crude oil chart. And then I don't really want to look at gold. Gold's actually done okay, I guess, but it has some moments that we're giving little head fakes like you see right in here. And it's been lately been doing that. It's currently in a long, but you had an okay long here and 2 fails here, but a nice long here, an okay short here, a nice long here, an okay short here. Looks like 2 fails, then a nice short, an okay short, a nice long, a nice winner for long, probably a break even. Then you get a nice long, you get a nice short, probably a break even, probably a small profit, if anything. Nice long here, nice short here. That's a fail. Then there's a beautiful short here. And the way you want to manage your trade really is up to you. If you want to use the strategy that I was showing you on the E-mini was designed as a starter strategy on the E-mini and specifically for the E-mini. whatever strategy you want to use. The signaler generator itself doesn't enter you into the trade. You still have to enter the trade. It's just plotting red bars to go short and green bars to go long, and it will plot a suggested entry and a suggested stop for you in whatever money management system you want to go along with it. Our software works on 2 platforms. It works on the NinjaTrader platform and the TradeStation platform. Now again, I'm not cherry picking the charts. This is looking back on gold, whatever day we're on. I'm just going back. I don't know if it's the best time to trade gold at this point. You can see this is not a big winner. This is not a big loser. It's probably a small winner, but that's a fail. That would maybe a break even or a fail. That's a good winner to the downside. That's a good winner to the downside. That's a winner to the upside, but that's probably a fail. That's probably a best case scenario. You got to break even or a small loss. There's a winner going up. There's a winner going up. There's a winner going down. And then you get this fail. Then you get this mumbo jumbo. I don't even know what to call that one. And this one here, probably a fail. But then you get a winner here. That's actually a winner, but I don't think you'd take it because, again, you're trading against a very strong downtrending market. Why would you want to go long? And you see, when you look at the chart, and I do believe that less is better when it comes to indicators. I do believe that, you know, you don't need to clutter up your chart. This looks like a lot because I got 4 markets on it. But when you really open up the chart, what do you have? You really only have 2 indicators here except for the signaler generator. You've got the large trigger lines and you got a Keltner channel. That's all that we use to give us direction and momentum. If you know the direction of the overall trend of the market, the anticipated direction, because if you get above the large triggers, and granted this isn't the best example to show you, but you technically, when your large triggers are magenta, your trend is down, and when they're cyan blue, they're up. Now, if you get into chop, then they're going to quite often change, and if you see them changing colors quite often, then you know you're in chop. And if they are going sideways like you see in here, you don't really have any trend direction. You probably should be sitting on your hands and not pulling the trigger. But once your trigger lines open up, let's look at it in here, and you're going long with the cyan blues and you're going short with the magenta trigger lines, and then again long with the cyan blues, you have a higher winning percentage chance because you're trading on the correct side of the market. You're trading with the trend of the market. Okay, and we're using the large trigger lines to help us to determine the trend of the market, and they're very good and very accurate. They're used as a direction indicator for the overall trend and to tell us with what strength or weakness the overall trend of the market is moving with. That's all you need. If you know the direction of the market, when you get the signal to go in that direction, then it makes sense to take the trade, doesn't it? I heard some commentators before me talking that very same thing, that they love to trade trend trades. Trend trades are trades that are trading with the trend. In this case, we're using large triggers in the Keltner channel to help us to determine the direction and the momentum in the trend. And if we take trades with the trend, then we're taking trend trades. If you take trades that are going against the trend, then you're taking what they call counter trend trades, and those are naturally more aggressive. And that's what happens when you get a long like you get right here. And we did get a signal alert because it's not perfect. But so you still got to use a little common sense and read your indicators, but all I'm reading is 2 indicators here, a Keltner channel and a large trigger line, to determine that, hey, your midband is red, and it's red because the market's been below it. And you've been below it for quite a while. Your trigger lines have been magenta. They turned a little cyan blue here, but never even opened up hardly. Your market trend is down. Why are you taking a counter trend trade? Counter trend trades can be fruitful, folks. I'm just saying they're just slightly more aggressive. They're less conservative. You got to build a case. You got to build a case to take a counter trend trade, and if you can't build the case for a counter trend trade conservatively, you should probably stay away from it. And so if you just trade with the trend, you can see how the trades would have been fruitful. Sure, there was a little fail in here. You should have avoided this green bar one, this green bar one. You should have taken this one if you were trading, and you would have lost, or you would have gotten a break even, or whatever it was. It probably wouldn't have made much money, if any at all. See, here's a counter trend that goes up. But I can bet that if we use some of our other indicators, if we wanted to, we could probably find some divergence here at the bottom that told us to anticipate a turn and a change in the trend market. But who really cares? In my opinion, from a conservative point of view, I don't mind missing this one because I wouldn't have taken this one, and I would have taken this one. And I don't mind missing this one if I catch all the ones that I'm supposed to catch. Okay? And that's from a conservative approach. Not everybody is of the, some people love to do counter trend trades. But again, if you want to add more indicators so that you can warrant doing those counter trend trades, then so be it. Here's the current gold right here. And again, we're watching the crude right in here. All right, folks, that's all I have. This is the Dimension Traders software called the Easy Trader, designed to have the shortest learning curve possible no matter what your skill level is. And it was designed to preserve capital and to be a conservative piece of software. And with that, I'm going to pass it over to Cameron. Everyone have a happy holiday, and we'll see everybody later.